This is a Stock Trading Reality Podcast, episode 150.
I guess in my expectation was to I want I think the dreams everybody's like I wanna be rich now. Like I just wanna hit it big and then quit this work and then just go live in the beach for the rest of my life. But it's harder than it is.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who believes Amazon Flex is a no-brainer decision, Clay Trader.
You really cannot make this stuff up. A little bit of context, we always do the introduction after the interview has taken place. And the theme that came out quite a bit, in fact, got Ches and I's adrenaline going in a good way, was the theme of no excuses. For those of you that listened last week with Mario, no excuses. But in this particular interview, as you're about to see, no excuses. And Amazon Flex is one of those things where I am a huge, huge believer in and would call it a no-brainer decision. Hopefully they expand to more cities. But if Amazon Flex is in your city, I don't want to hear your crap about, I don't have enough money for anything. What are you doing right now? Watching HBO? Well, then get off the couch and Amazon Flex. I mean, check it out for sure right now. I want to make sure they're still around. They are. And right at the headline, I see you make $18 to $25 an hour, and you drive around, deliver stuff. So you can listen to trading psychology books. You can listen to biographies about successful people. Heck, you can listen to the podcast while you go around and deliver stuff and get paid to listen to Ches and I rant and rave about things. I mean, so it's really, really a no-brainer decision. And again, if Amazon Flex is in your city, I would say it's great. And Ches seems, weren't you thinking about doing this at one point, Ches, or am I just making that up?
No, it was me and other community member Surly. It was offered in the Denver area. However, I never ended up doing it. There are some other people I know that do it in other cities, but now that since I've moved, I'm absolutely nowhere near an Amazon fulfillment station. So, but yes, if you really have no excuses. There's no better way. I mean, Clay, you summed it up perfectly. There are so many options out there for people now who can literally make their own schedule. You can make your own schedule for the whole Amazon Flex thing. That's the whole, that's why the word flex is in it. So, yeah, there are no excuses. If you find yourself, slacking off on the couch and eating potato chips and complaining about your life, there's steps you can do to kind of change that. So, I don't know. I don't feel bad for him.
Yeah, neither do I. And maybe if that makes Ches and I jerks, then I guess we're just jerks. But you'll see. Just wait until you hear Diego's situation and how he's still managed to learn how to trade and is still actively trading, and then you'll see what Ches and I mean. But I just found that amazing because all of the fun facts, they're just, we don't pick and choose. They just come in a certain order. And this one just happened to fall right on this podcast where, the theme is no excuses. And I kind of already let the cat out of the bag. But today we are talking with Diego. He's been a member for quite a while. He's not in the chat room a whole lot. That's because he's super busy, as you'll see. But when he does make time, he's in there. He's, great interview. A lot of good stuff to talk about. He went down the penny stock route and needed to get kicked in the face, and then had some revolutionary ideas about the natural gas market. But we'll get to all of that, but definitely give it a listen all the way to the end. And no excuses. Diego, welcome to the show.
Hey, good morning, Clay. How are you?
Good. How are you?
I'm very good, sir.
I appreciate you taking time out of your morning. A little bit of context here. It is the Friday before Christmas. Now, by the time this airs, it'll be, well past Christmas. But I mean, this is just the dedication and the willingness of our community. Is Diego's taking some time out of his schedule, out of his trading but trading action is kind of bad this morning, which makes sense. A lot of people are hitting the road to do their holiday traveling and all that sort of stuff. But thank you, Diego, for taking time out of your morning. I know you have a very busy schedule, and I'm trying to remember where you are, but where are you at geographically again?
I'm in Houston.
Houston. Okay. I knew you were down south. I couldn't remember how far down south. And you had mentioned before you got recording that you had 2 inches of snow down there, which is pretty crazy. So I just out of my curiosity's sake, does everybody go like bonkers? Is it like Armageddon, the end of the world, when snow starts to fall in Houston? Does everything shut down? Or I guess walk us through in a nutshell, just kind of the environment when it snows down south as far as Houston.
Well, it's funny because when I came to the country, I came to Boston, so I was already used to the snow. But then here in Houston, I came on a Friday, like well, it was like already Saturday morning, like 1 o'clock in the morning, and then I'm sorry, and it was on Thursday to go on Friday, and around the neighborhood, everybody was out in the street, on like thick coats and beanies and gloves, and I was like, so it's about 40 degrees. Well, not even 40 degrees because otherwise there won't be a snow. It was about 32, just freezing. But the people were like, we're up in the north, when you're used to just bundle up 3 layers of coats
No,
Like they're
yeah,
Eskimos.
yeah,
and
yeah.
and people just making the snow angels and the a lot of a couple neighbors
Snowman,
making
yeah,
some
snowman, and all that
snowmen.
sort of
Yeah,
stuff. I mean, you say
yeah, some of
32,
them were
and
making snowmen.
yeah, and I'll speak for Ches here, knowing that he grew up in Chicago. But I mean, 32 by no means is that like let's take our shirt off and go to the beach type weather. But it's also not like we need to bring out 18 layers of socks and 14 layers of gloves or anything like that. I mean, 32 is
Single digits is when it's cold. 32
yeah,
is not half
Yeah,
bad if the sun's out
yeah,
too.
exactly, yeah, exactly.
yeah.
So, anyways, very interesting. So you're quite you're not like freaking out when it's down. Like probably I'm sure a lot of your Houstonians or whatever they're called. But anyways, so let's get into the journey here. Where did all this start for you? How did you first hear about the market, and then what happened that drove you enough to not only want to get involved, but get involved to the point of maybe starting to put your own money into the market.
All right, let me give you a little background. So I came to the country in 2007, and then afterwards I joined the military, and then until last 2015, when I watched this movie called The Big Short, I didn't know there was a financial crisis until I saw that movie. I didn't know because when you're in the military, you just, at least the young guys, we just don't watch all the news
Well,
around the world besides
right.
anything
You're in your
related
own
to
kind of
war.
world, right?
Exactly. So me, I was getting my paychecks every 2 weeks, like nothing happened. My family was fine, and like I say, until 2015, I didn't know there was a disaster, like a meltdown. So from 2008 to 2015, I kept putting money on my TSP account. I'm sorry, until 2013, that's when I got out. But all that time it was in the TSP account because that's what they told us to do. Like just put 10% and your TSP, let it just grow. So came in August 2015, and then out of the blue, I was like, let me see what this thing is doing. And then I log in into the account, and then I got this amount of money. And I was like, okay, that's good. But then I look at the very next day, and then it was the money that I had the day before minus 750. And I was like, okay, what just happened in just one day? I lost
Piqued your interest right there, I'm sure.
$750. And it's like, what's going on here? And then little did I know afterwards when I got more involved that in August there was like a big sell-off that happened on that year. And that probably what caused it to lose 750 in the account. And that point forward, I decided to, let me see what's in this account, and I realized that I had the default setup when they put you on like retired to by the year 2040 or the year 2030. I had it by the year 2040, and this thing was terrible. Like I think it was only like 4% return in the year, and then I started doing some research. Like, okay, I gotta make some changes to this account, and I decided to look in MarketWatch and doing some Investopedia to read about what to look in a mutual fund. And so they give you tips like look for the expense ratio, the distribution, the holdings, the track of how many years the fund has been active. So based on that information, I decided to transfer all my money from that 2040 plan to individual mutual funds now, to like the Fidelity K fund, and I had like the international one, the mid cap, based on what I learned at that time from Investopedia. And
And is this
and
still
then
2015 when you were doing all this moving around into the mutual
yeah,
funds?
yeah, this is about August through September
Okay.
in 2015. And then I started like paying really close attention now to what the funds were doing, like not to the point that I was going to start day trading. Like I forgot who was that. It was day traded with the 401k account, but I was kind of watching it like every day, like around the open, a noon, and the close, what the funds were doing, and they were moving cents, like 10 cents, 15 cents, and and then afterwards I got to the point that I was actually watching now what was in the fund, like every individual holding in the fund. And
You call it the bug,
then,
Clay.
Yeah, it sounds like the bug bit him in a big way.
yeah, I mean, I was getting very involved now, and then I started reading to this, what's it called, the website? Yeah, the Street, which is the Gene Kramer's website, I guess. I guess it's coming from Mad Money. And then so there they put tips on like I forgot, like the stocks that are about to blow up or to break down, and the under five that are about to break out, and all those articles. Then which afterwards I realized, like, I don't know who make this up, because one guy is bullish, the other guy is bearish, and they work for the same site.
It's the beauty of opinions now, but correct me if I'm wrong. Was it really when you started to look into those mutual funds in terms of the individual names that you kind of had a sparked interest in, this one's going up, I should be more in this one, or this one's going down, I don't know why I'm in this one?
I'm not quite sure. I was just looking at the what's it's there's two numbers that I paid attention at the time. There was the YTD return and the 12 month. And if whatever has the highest percentage with the lowest expense ratio, that was it. I
And
didn't pay
sometimes,
attention
to be
to like this one is loaded in tech stocks, or this one is loaded in financials. No, it's just me. If it's give me 10% return and I'm point 40 in expense ratio, I'm gonna take it.
at this point though, you were all focused on investing, was it, or were you trying to trade these mutual funds back and forth like as an active trade? What exactly was your mindset? Putting yourself back into this position. Sure, had sparked all your or
I
had
know
sparked your interest. Sure, you were focused on it, but what were you still just looking to invest at this point, or was this like an active? I want to buy this mutual
no,
fund
there I was just
this
trying.
month, and then 3 months later sell it if it goes up.
That was just me investing, like trying to protect what I had.
Okay, so
Like,
yeah, no, I understand that, and with the point I'm trying to make here, and because really you were just making it up, you didn't really have any sort of rhyme or reason. But I would also argue that you did have rhyme or reason, because at the end of the day, and I haven't coined this phrase, but at least doing something in regards to investing is better than doing nothing at all. Because even if you were just getting 4%, let's just say, 4% is better than money sitting in somebody's drawer, sitting under somebody's mattress. So to your credit, at least you were actively doing something. Probably not the best way to go about it, but at least you were doing it, relative to somebody that's not doing anything at all. So what finally happened where you kind of changed over from this investing mindset to more so, hey, what's up with this trading stuff? Okay, I want to learn more about trading. So when did that transition start to take place?
all right. So like I said, I was digging in these websites, Market Watch and CNBC and the Street, and then I guess they're geniuses because they put in a bunch of advertisement for brokers, for At that time, it was like Trade King, Option House, and Thinkorswim, and then they put all this advertisement. Then I was clicking on, and then I clicked in on Option House, the first one, and then I read through the site. And I was like, there you can buy for like $4.99. You can buy the stock, and in my mind I was kind of clicking like, all right, so I can own this thing and then just probably at some point have control myself instead of somebody else doing it for me. So I decided to put in $500 into Option House to try to trade.
How much money did you put in there?
$500.
Okay, keeping your risk small to start. That's good.
Yeah, I didn't. Like I said, I wasn't quite confident on what I was about to do. I mean, I didn't even know. And then, so I started trading. And by trading, I think I mean probably about swing trades. I wasn't day trading. I was just swing trading there at that time. I was just reading. I mean, I was all in the Kool-Aid for the street, and I was buying based on what they were saying, like the stocks that were gonna break out. But I wish I could have the first the first trading notification to give you. But I think my first trade was bought 12 shares of BlackBerry.
Was this
And it
still
was
2015
about
for context?
I'm sorry?
Was this still in 2015?
Yeah, that was in already about October, November 2015.
Okay.
So I bought some BlackBerry, and then I was working. I'm still working in the oil and gas, and then the price of oil was going down, and then all these companies were selling off like crazy. Like we're talking like Chesapeake, CHK, Sandridge, SD, and then Halcon Resources, HK.
Now,
Chesapeake was under 5.
correct me if I'm
I'm
wrong
sorry?
though. How did you even find those names? Was this off of the street recommendations? Is that where those tickers were even coming from? Because I'm more so confused
No,
about how you found those.
those because those were my clients. I have projects
Gotcha.
with those clients, and so I was thinking like, how come these guys are still drilling? They should have money. They should be healthy. And HD Sandwich was about penny stock, about 21 cents. Halcon was about 13 cents. So I load up on all of those. I mean, we're talking like 1,000 shares, 2,500 shares. And then I think this is in the minds of everybody who goes penny stocks is like, you start pulling your calculator and you're just like, man, this thing goes to $5. I can be this much. I can make this much money. And so I was like, I just hold them. So I just bought a bunch of those. And
With the
then I just waited
$500,
for
you were
like
spreading out the $500, or did you put in more money into your account to do this?
no, I just with just $500.
Okay, all right. So you're diversifying with $500, so we'll give you a little bonus point there. You still had no idea what you're doing, but at least you were managing risk kind of.
Oh yeah, like
So I just want to make
I'm
sure you
sorry?
didn't throw $500 into one and then like, oh, let me put in another $500. And this was, I'm trying to think, 2015, Ches, that's when is that when the peak of oil happened, or is oil's been downtrending or oil's been low for so long now? I forgot when all that really started to happen, but 2015, that probably makes sense why all those Chesapeakes and stuff like that were falling in price.
Yeah, 2015 was just from very far. It lost more than 80% of its value at one point.
Okay, that was in
crazy.
2015.
Yeah.
Okay, all right.
Yep.
So that makes sense. So that also makes sense then, because that was in the headlines quite a bit. While you would say, oil and gas stocks are this low, and then all of a sudden you get the penny stocks and the calculator game. We've heard that time and time again. I know Ches has done it. I've certainly done it when I was back in college with my stainless steel muffler company. Wow, I bought here. So if this thing, a lot of people are saying dollar land, but even if this thing just goes to 80 cents, I'm like never going to have to work again in my life. And the calculator game, well, it's very, very powerful. So, I mean, you're in these stocks, you've quote unquote diversified. And I don't know, how'd that go for you? Did you hit any hit any home runs or what? How did it all unfold in the world of penny stock investing?
No, I think that was so boring. I remember just watching my P&L was about $10, $15 a day. BlackBerry was moving about cents a day. I think the most fun to watch was Sandwich. It was from like 21 cents to 17 cents, going back to 20 cents, going back to 18. It was back and forth. And but then I got bored. I mean, I guess in my expectation was to I want like I think the dreams everybody's like I wanna be rich now. Like I just wanna hit it big and then quit this work and then just go live in the beach for the rest of my life. But it's harder than it is. It's
Yeah,
you think you put money into these things and you expect to just one day make 10,000%. But yeah, it's not that how it works. So when I got bored, I decided to let me find something else that is more active. And then unfortunately, I was reading a lot of stock tweaks.
oh, here we go.
Yes, yes, seeing what the people. I mean, at that time, I thought those were the experts. uh,
That's good, Ches.
seeing what the
Stock
people
twits are
is
the experts. Yep.
seeing what the people is it's saying about this thing, and then I guess because it was all related in gas, oil and gas. Uh, Somebody put in the tickers for U gas and then D gas, and those were fun as well. Though you guys, I mean, you guys were about under also penny stock under $1, and then D gas was about one. But I was so clueless about this thing that I didn't know one was going bullish, which was U gas, and D gas was going bearish. So I actually posted in stock tools like, guys, I think I discovered this thing. When you guys goes up, the gas goes down. And I was like, I'm a genius. I got this thing. And everybody just kind of laughed there, like put some sarcastic comments. And then I started putting on you guys, kind of like make it a gamble on Wednesdays, if I'm right. Now this is now about November, December, mostly December now. December 2015. On Wednesdays they release
The
the
reports.
natural gas reports. Yeah, and then I mean this is like earnings is every Wednesday they say we got this many gas we do or we got a surplus we got a deficit, and based on that the thing goes up or down. So I still have about 400 something in my account, and then I just every Wednesday I keep just putting on money on you gas because it was the cheaper one. It was under one, and then I remember one time I was
Now let
actually
me ask this real quick,
looking at the
just to
weather.
kind of get in the mind of your strategy. You're putting money on because you thought it would go up, or you were putting money in because it was just simply the lower price one, and you knew that the reports were out. I mean, I get that this part of the strategy was you knew these reports were coming out, but why were you actually going, with UGAS as compared
All
to
right.
DGAS? Or was it just literally a total gamble? Hey, you know what? This one's cheaper. I can buy more shares. I know the reports today. I'm going to put money in there. Was it just as simple as that?
No, I'm gonna tell you my analysis, which is very. I mean, now that I realize that it's ridiculous. So I was going you guys first to answer your question because he was under one, so that I can buy a lot more. How can I call it? I can buy more out because it's not an option. More stock of it. I got more value,
He got more bang for
right?
his buck
More
on
shares.
his gamble. That's right.
Yeah, I got more shares, right? And then two, I was looking at you guys because he was bullish, and then to top it off, I was looking at the weather report. I was looking at what is it going to snow in Denver? Is it going to snow in up north in Philly? How's the weather is going to look like in the next 2 3 weeks? Because in the stock tweets they were saying like if it's going to snow, that means people is going to use the heaters, which means they're going to use more gas, which means there's going to be more demand for gas, and therefore it's going to go up.
Now, correct me if I'm wrong, Clay. Do you think the analysts at Goldman Sachs and J.P. Morgan have thought the same thing in the past, or no? I'm not making fun of you, Diego, because I thought the same thing before.
No, go for it.
Yeah, we've had people in the community the same way. Oh, it's going to snow. I'm super long natural gas, and I'm like, I kind of think that there's more that goes into the pricing of this, but okay, sure.
No, those guys that go to Ivy League schools and get MBAs from Harvard and. No, I don't think they'd ever thought of anything like that. No, I don't think so. That's revolutionary thinking on my part, but or on their part, because I would. I mean, StockTwits is the experts, but that is funny, Diego. That's but Ches nailed it. It's we're not making fun of you. We've all been there, but as a cautionary tale to you as a listener, if you're new and kind of that's your premise, that's your thesis of going into things, where you're oh yeah, because event A happens, therefore event B is for sure going to happen. The markets are smarter than that. The markets are very efficient, and they know how to price things in. And when you get involved, especially in the options market, then you really start to understand how things get priced in and how efficient the market actually is. So I'm not saying that you as a listener can't come up with a good idea, but if everybody on social media is proclaiming this idea, that's kind of called herd mentality, and herd mentality can sometimes get people in trouble. So how did all this turn out for you? You had your thesis that it's going to snow in 3 weeks. All these people on StockTwits are going to need heat. So I'm going big. How did that work out?
All right. So I put like I said, anything that I had left, it was about 400 something, 100% all of that into UGAS. I was loaded up to the teeth, if that is an expression.
You're loaded to the gills.
And then the report came out. It came out good. It came out that there was going to be more demand needed, and then I guess the way it goes is like there is a reduction in supply, and then so everybody, well, at least okay. So I was like, okay, reduction. That means this thing is going to go up. And it happens to Sean once with Apple when she said like it was great earnings, but the thing came down. And it happened the same thing with you guys. Apparently it was a good report, but then I guess the market was expecting more for it. Was expecting more of a reduction in supply. And then this thing just plummeted. Like I lost in a matter of seconds. I saw that P&L go negative. Not negative, but the 400, I already lost $250 in a matter of just seconds. Like
wow,
and he was gone. And then my heart started pounding like I don't know if it was adrenaline or what, but my pulse got faster.
Did you get lightheaded?
And I felt no, not to that point. But
okay, I've been to the lightheaded moment before, so okay, it wasn't quite that drastic, but I know the feeling.
Because I lost money. But when you lose money, like I was just like you're gambling, like playing blackjack or anything like that, then you're having fun. You're enjoying it. But this time it was like I was expecting to make money out of it, and then when it's in
that expectation fell flat on its face. And Clay, this brings up a good point because we have people who say, oh, I see how bullish or bearish people are on StockTwits for earnings. The earnings could fall in line with, say, they go up, and then all the bulls are like, yes, this is great, and then the price goes down, and that's just the power of expectations. That's how, correct me if I'm wrong, that's the reason why you don't even trade earnings at all, Clay, do you? Because for the most part, we pretty much sum it up as simple as it's kind of a crapshoot trying to forecast what the market wants and what the market doesn't want.
Well, Diego said it perfectly, and I'm gonna nitpick here, Diego, but you said a good earnings report came out. Good according to who? Your opinion, right? Your opinion doesn't mean squat.
Yes.
My opinion doesn't mean squat. Chez's opinion doesn't mean squat. Good is a relative term. Who is the ultimate judge of good? Who is the ultimate judge of bad? The price action. And apparently it was a bad report because you just said the price tanked. And that's why we love charts around here, because what do charts mainly focused on? Price. So while other people out there, oh, no, that's a good earnings release. That's good. Oh, the price is going down. No, it's good. No, it's clearly bad if the price is going down. And that's kind of always one of my pet peeves is People start throwing out there, oh, why is it going down? It was good news. It was good earnings. According to who? No, it wasn't. If it was good, the price would be going up. Apparently, the ultimate judge, aka again the price, and I realize I'm repeating here, but this is a very important point that a lot of people don't understand. And Diego just said it himself. The report came out and it was good. Do you know what I'm saying, Diego? Apparently, it wasn't a good report because why did the price go down then? And we all just and Ches, he tossed that over to me very perfectly. Yeah, that's why I don't trade earnings. I just look at the chart. I want to know not what I think is going to happen. I just want to know what is happening, and the is happening is all about the price action. So, yeah, thank you for saying that, Diego, because that's a good rabbit hole that we've been down before, but it's been a while. So that's definitely a good reminder. So I guess looking at the time, I mean, we're not almost done, but when did things start to shift where you just realized, you know what, I don't know what I'm doing. I need to just tap the brakes here and start to reassess the situation and, buckle down and get a little bit more serious about this because apparently I'm just gambling. When did that happen? Was this after the UGAZ event or did, something else need to happen first?
No, something else happened first. And that's when, so I left, I lost 250 there and I had 100 and something left. And then I learned about options. I read about what is what is a call option, what is a put option. And then I was more inclined towards the call option, and I said, okay, I am going to put in this rest of money into Chesapeake. I'm going to buy some options, which were priced very low, but about 20 cents a contract, until next July. And let's see what happens. Either I make some money out of it, or it's just gone. And
so, I mean, it's good that you had set your risk. That's the beauty of options, though, too, is that you can kind of set your risk in advance. So you used a small amount of capital outlay. You kind of picked where you wanted that the price might go, and you're going to see what happens. So I guess, I mean, obviously now we're changing gears here. You're in options now, so I mean, you're really getting into the trading part. So I guess how did that all turn out, or what did you do in the meantime, or did you just kind of park that money for a year and then check on it the following year?
No, that was January 2016 now, and then so I put in 5 contracts on Chesapeake, going long on options till July, and then something happened. I don't know, and then but the thing just went up from $3 to $7, and then it was a 5 call option, $5 strike, and then so $120 became $700, something like that. And then I was like, oh, this is nice. This is great. I can just be doing this and see if it goes from now on, make it this 700, make it 7,000. And then there's something with this ex-CEO of the company was killed in an accident. And then I jump into Stock2X again and then ask the dumb question like, okay, the ex-CEO died. I'm assuming he had some shares. What's going to happen to the price? It's going to drop because everybody's going to start selling. He's part of the company, and then somebody answered is like, yeah, man, this thing's probably going to tank. And I was like, oh man, I gotta sell now. And then so I sold off my I liquidated the account for like $400 because at that time this thing was going down as well. The price was going down, so I liquidated. And about 2 weeks later, this thing came up higher, and the options were now worth, I did the math afterwards, and it was now worth $1,400. And I was like, man, I wish I could just hold those options. And I got the hindsight struck me there.
Did you buy higher though? Did you chase the price at that point, or did you let that one go?
No, I just let him go. I just liquidated everything. I was like, at that point, I realized like I need to know exactly when to get in, when to get out. And I'm not gonna lie, Clay. When I look into your, at that time actually, I was looking at your charts on YouTube. You were doing some charts on Chesapeake, and I like the style. And then so I had and then on the stock tweets, people were posting your charts as well. So I kind of had you in the back of my mind about Clay Trader. But I'm not gonna lie, when I went to your site and I look at the inner circle, I was expecting buy and sell signals, you know? I
Yeah,
was
you're
like,
expecting me to you were expecting me to stick my hand up your backside and treat you as a puppet. I got you. That's what you're
yeah,
expecting,
I
yes.
was expecting like I'm gonna pay $99 here. I'm gonna wait and people tell me now's the time to get in, now's the time to get out. Based on that experience that I had with pitches with Chesapeake, because like I said, I missed above $1,000 just because I got out early because I didn't know what was the actual. I mean, at the time, no charts at all. I mean, just looking me at the actual price of the thing, like okay, it's $5 now.
Yeah, you
Okay,
had no you didn't have a management system in place. Your management system was your gut instincts, it sounds like, and
yes, exactly.
you were making it up as you went.
So now to put a little fast forward, now we're talking about February, March 2016, and then so I joined the inner circle, just the inner circle, and then I go into the chat and introduce myself, and then I look at the trading pit, and then I see people putting this lingo, and then it's like, man, what is these people talking about? Like, what it's a bull pole, what it's a cliff. I got no clue what these people are saying now, and then my expectations were crushed. You know, like the time was like, man, I think I just lost $99. And so then I start going into looking at the general chat when everybody posts their P&Ls. You know, once in a while everybody posts like kind of like motivation to everybody else, like $50 here, $70 there. I don't recall seeing anything from Hooch or Sean, but I was like, man, I wish I could be like these people, just making $100 a day. In my mind, I was like, $100 a day, 5 days a week, that's $500. That would be great for like a part time. And so it's like, I need to learn. I want to learn. And so I bought in robotic trading. And afterwards, after a couple of videos, I was like, this is great. And then I go into the chat, and then somebody else is like, if you want to really learn about this thing, I recommend to buy, because nobody there forces you to buy the courses. They recommend you to buy the courses for your own good. I forgot who it was. I think probably was Art. I forgot his name. RD. No, RD.
RD Trader?
No. I know he's a senior man. The one that posts like the warning when you go into the first time.
DT.
DT, yes. DT, he said like recommend to buy RT robotic trading skill sharpening, and I did bought it. I did buy the course, and then so I keep looking at robotic trading. I like the style, and then Nate, I'm not sure it was you, Chess or Nate, came out
Nate
later about a
Wilson
week.
or
No,
IT Nate?
IT Nate.
Okay.
About 2 weeks later, saying like, because you already got these courses, we're gonna be able to give you like a discount to buy the entire CTU, and it was not the full value of the courses, but it was about 50-60% of the value of the courses already applied to the CTU. So at that time, it was March. I was like, this is gonna be my birthday gift. Like I wanna learn this thing. I wanna do it right. So I purchased CTU, and then I did nothing afterwards actually, because I'm in school. I'm right now majoring in mechanical engineering. So it's difficult for me tangle my day job and the school and the family, and now my trading career, if you will.
I will say this. I'm an engineer by degree, and when I went through the engineering curriculum, I was a bachelor for the majority of the program, and then my wife and I were married my senior year of college. So to hear that that you are getting an engineering degree with did you say a full-time job?
I do, yes, I do have
How many
full-time
hours a
job.
week do you work?
Well, it's it's very
Just how
flexible,
many hours a week do you work?
but
I don't
it's
care
in the
about.
book should be 40. Should be 40.
Oh, okay,
40
40
hours a
hours a
week.
week, getting a mechanical engineering degree, and you said you have a family. Or do you have a wife? What's your family? I mean,
Wife, just
a
my
wife
wife
and
and one daughter, 5-year-old daughter.
oh, okay, all right. So let's. I know Ches knows where I'm going with this, But just, we were talking with Mario a couple episodes ago or last episode, I should say. And this is perfect. Some of the times the pieces fall into place perfectly. But think back to Mario's episode. Now let's talk about Diego here. Again, he's getting a mechanical engineering degree, not a Greek Roman art history degree. No, a mechanical engineering degree, full-time job, working 40 hours a week. And he has a wife and a child. And as somebody that has, 3 kids below the age of 5, I can attest I have experience with that range of kids. So no excuses, people. That's why Ches and I are jerks when you start throwing excuses at us and we don't really show that much pity to you, because there's people out there such as Mario last week. There's people out there such as Diego. And there's lots of other examples we've had on the podcast where there's a will, there's a way. Yes, I'm getting animated because this is why I don't want to hear your excuses. I just don't want to hear it.
But Clay, there's a new HBO series on, and I want to watch that tonight instead.
Yeah, I don't want to hear it. And this is not me theorizing. I am an engineer by degree. I know what that takes. And, calculus, that's just the surface of things. I mean, Diego, what do you think of differential equations, man? How do you do with that sort of stuff? I'm sure you've had to take some of those classes. Do you like those?
Yeah, it's very mechanical. It's like once you know how to do and what to do, it's becomes very simple.
Yeah, I'm not trying to rag on Greek, Roman art history majors, but let's just all agree, going to offer your opinion on a painting, for solving differential equations and double integrals, and there's just a big difference. Moral of the story: I don't want to hear your stupid excuses, because that's all it is an excuse. So, anyways, you decide to give yourself a birthday present. That's great, and also, I do want to commend you, because we've had some people, show up, they pay the $99. Wait, you mean I have to actually put in more effort? I mean, I'm supposed to learn how to read alerts, and I'm supposed to learn how to think for myself? All right, I'm out of here. You thought the $99 was wrong, but you gave it a chance, and you eventually came to realizing and wanting, which isn't surprising, you're clearly a self-motivated individual, but you came to wanting to learn how to identify, how to understand, how to think for yourself. So props to you for that, because there are some people that show up thinking it's gonna be puppet trading, and then all of a sudden it's not, and they just go waste their money someplace else from somebody else that proclaims they'll get them rich by sending them text message alerts or whatever. But you get Clay Trader University, and you start to go through it. And when you were going through it, what was your end goal? Were you still wanting to do options, or were you thinking about doing stocks? But kind of what was your mindset and end strategy at that point in time when you started to go through it?
At that point in time, I wanted to just go options, but just regular options, like long options. Just puts and calls, and that's it. Keep it simple.
Perfect.
Right.
And
generally, keeping it simple is not a bad way to go for that. But so obviously, you must have had your eyes open from the robotic trading courses, the technical analysis side of charts. Did you ever look back at some of your old trades and go, "Wow, I really should have bought there, and I should have really sold there"? And obviously, that's hindsight. But did you start kind of looking at some of those previous tickers you were involved in before?
No, I did not actually. It's like it's something.
Because you're scared, because you knew it was probably going to be a horror show.
It's something that I learned on my just regular studies on personal growth, is just let the past become the past, and just move forward and just live the present.
That's a really strong, attribute to have for trading, because a lot of people, including myself, I've had a horrible habit of, holding on to losers in the sense of holding them in my mind, not actually physically holding them till they go to zero, but just holding them in my mind. And you absolutely nailed it. You got to just be able to move past your losers. It's part of trading, and onward and upward and looking forward. So that's awesome to have. That's like a great life attribute to have. So obviously, you get through the courses, you want to focus on options. Now, how are you going to find, what you want to trade? What you're going to stick to industries and stuff I know obviously you were hanging on oil and drillers before, but we're going to start scanning. You're going to start utilizing the chat room. What's your plan from this point?
All right, so when I fast forward about 4 months, which is the entire summer of 2016, I spent that time just studying CTU, just studying entire courses.
Okay, so I want to quickly make a point. Sorry to cut you off. I know that's rude, but sure, he said he's fast forwarding 4 months, but these 4 months that he's fast forwarding through, he is studying. He is pausing his trading. believe it or not, sometimes you have to pause your trading. So sure, he's glancing by it, but in real practical sense, that's, 4 months. That's a pretty long amount of time, all summer long. No trading, just nose in the books, nose studying. So keep that in mind. Keep the context. That's actually very important. So, all right, I'll let you now fast forward, but I want to make that point real quick. So fast forward 4 months, pick it up from there.
So now we go into about fall 2016, and I'm now getting more involved in the chat, and now I have the put in $1,000 in the option house, but I'm not trading. I'm just paper trading a little bit, just on which I think happens to everybody. You just they give you a 100K, and then you buy Amazon, you buy Tesla, and all these higher stocks, and with great returns and options. Because a move in those can either make you or kill you. And so I just looking at the chat room, and I've been identifying the alerts and getting familiar with the common names that people usually just alert about, which is the Facebooks, the Apples, the liquid stocks. And I'm not actually doing any scanning at all. I would just my only scanner was the chat room. I was just getting the names, writing it down, making what's common, what's not common, and I'm still just pepper trading or aim properly, because, like I said, I give you 100K, and then
not paper trading realistically. That's a problem.
Yeah, so that happened to me as well, and so pepper trading the entire fall. I am part of the just the fall, the winter, a little bit of the winter. And then I'm getting more used to the mechanics, and getting to know the broker, because option house, it's all right. It's for it's not day trading friendly for sure, because the commissions are just ridiculous. But I think it was for my needs, it was just fine. It was just okay. I was getting used to kind of setting the other what's called the OCO, the one cancel order. Yeah, the one cancel order trade, and then kind of just getting used to, okay, I'm gonna put in my entry here, I'm gonna put in my stop loss here, and then this will be my target. Putting those kind of trades, and finally, it came the time to, once I listened to a podcast, I forgot who it was, that is say paper trading is okay, it's good training, it's good practice, but you need to actually put some money on the line to start feeling, because it's all about. It's about feeling the emotions. That's a different game now. Something is when you're technical savvy, you know what to do, but something else is when you had to know how to react based on what you do.
Right, and I was just gonna say, at what point did you go from paper trading to putting money on the line? Because, like you just said, it's a whole different animal.
So that was now February 2017. That was this year finally. That I started trading on option house, going long options on the stocks that I was very familiar with, and just put in like $50 contracts, $100 contracts, based on my strategy, because it was based on what theta is gonna give me, how theta is gonna get reduced on the time frame that I was looking at. I was mostly looking between 15 to 20-day options. And if the theta was kind of high, I was like, no, that's not a good strike for me. Let me go a lower strike. A higher strike bets in the theta is friendly. That's the only Greek that I was looking at, just the theta. Of course, I was looking at the delta, but I was paying more attention to the actual decay of the contract, because that's a killer for anybody going long options is the decay.
And good for you for recognizing that.
It's like you have to get it. You gotta time it perfectly, pretty much. It's like there's there's no room for mistake on timing. It's like you have, if you want to get profits of it, you gotta time it perfectly. So
Yeah.
finally, I'm able to put in some swing trades. I was not very confident on my day trading, which as today I'm not quite confident still.
That's actually a perfect
Uh,
segue. Where are you at today in your trading? Looking up at the time, and we'll definitely have you back. So it's not like we'll never hear anything. But I mean,
so all right,
today,
all right. So
where does things? I know you're super busy because that's why we're doing the podcast right now, because we wanted to just get you fit into your busy schedule. So where do things at this moment in time? How are things looking for you in terms of what are you up to trading wise?
okay, so I'm gonna fast forward real quick from February till August. I was just going long options, very profitable actually. But it was a roller coaster. It was the P&L was going up and down, and it was just long options, just pure puts and calls. In August, I decided to finally submerge into the advanced options, and right now I'm only sticking with three strategies, which is spreads, puts and calls, and iron condors. And right now, all I'm doing is just selling premium.
Okay, very very nice. I'm curious though. You said you when you were going long options, it was very profitable. Yeah, it was a roller coaster, but was that period still a profitable period for you?
Yeah, it was very good. Like
Okay, so
I
I guess
could,
my point was you just didn't like the roller coaster aspect of it. Sure, it was profitable, but you didn't like profitability being associated with such a roller coaster. Is that a fair summary of kind of why you decided to look into advanced options?
yes, sir. Actually, let me put you a color context. Let me 1 second. Let me look at the my first log there for Tasty Works. And so remember at one time, so I emailed you saying like I have this many wins and this many profits and like this many losses. So when I say it was very profitable, like I can make a killing in one contract, but then at the same time I can lose a lot in just one contract. So put it in context. In that account, I made $4,000 for $4,200, but then I lost $3,700. I came in a profit, yes, but did you notice
That's a roller coaster.
it was it was ridiculous. It was like I can make some money, but at the same time I can lose that pretty much the same amount of money. At the end I came out on the green side, but I was not okay with me because like I say, with the option going to options, you just gotta get the time, and if you don't have the time, you
Right, right,
become a
and
loser pretty much.
that's always amazing. We have in the chat room some people they just have a knack for options. They do it very well, just trading them long, and buying puts, buying calls. And you came out profitable, like you said, but you just weren't. Yeah, those swings just not worth it for you. And now you're focused on the advanced options, and you said that the spreads and iron condors and another one I can't remember, but is that kind of have you gone through the advanced options course and all of that, or are you still going through it as you're learning about these different, or as you're implementing, I should say, these different strategies?
No, I went through in the summer. I went through the advanced option course, and then
Okay.
I learned all of the strategies. But and the truth is that I just went to I just wanted to get something right, and then dedicated myself to trade only spreads and iron condors. And right now, those are okay. Those are doing great. And I'll have the on my own log and put some statistics to kind of know where I'm doing with this thing. And to give you a context, uh, on iron condors, about 80% profitable, or 80%, 84% winning ratio. On spreads, I got 74% winning ratio. And then I'm just playing the other ones, which is like because I really try putting some calendars and some, and the other one is the ones that it's uneven, the ratio spreads, and those are about 10% winning ratio. So it's like, just stick with the ones that are very confident and that I know they're profitable.
Yeah, stick to the ones that pay you. And for context for listeners, remember how busy Diego actually is with a family, going to school, with a full-time job. And I can attest this from personal experience how awesome advanced options are in terms of, correct me if I'm wrong, Diego, but you can almost set it and forget it and maybe check in on it once a day. But for the most part, you don't really got to tinker with anything. I mean, you set the trade up. When you put the trade on, you know your odds, you know what you're likely to make, you know what you have to do if you're going to be losing on it. That works pretty well with your busy schedule, doesn't it?
Oh, it's great. This thing is great. Like I plan the trade the night before, and then I can either I set it up. I put in my order like when the open from 8:30 until 10. If I'm in, great. And then I look again about by close by 2 o'clock from 3 p.m. and see if the chart's still healthy based on my plan. I put the order again and try if I get hit because I'm usually just going on the mid price. And if I get hit, if I don't get hit, well then I plan it again that night and see if the chart's still healthy, the setup's still okay, I go for it. But with me tracking the my positions, I just do it mostly at close, to be honest, and sometimes during lunchtime. And that's all kind of a quick look, like make sure that nothing kind of get out of hand, like nothing is really deep in the money, but just every now and then just making sure that still okay. This time I know like my heart is not go out of my chest when I see that I'm losing $50 in one day, because I know that I'm still out of the money and I still have some lines, some support that the price has to go through, and there's still plenty of time. Like I got 20 days left and still in the trade, so I don't freaking out about like I'm losing $50 a day now. It's, oh my god, I'm gonna have to get out now. Just gonna wait, let it adjust to what the
Yeah,
actual strategy is all about.
exactly. And what you just described is the power of a plan. Your heart's not jumping out of your chest. And, if sure, because you understand the plan, yeah, maybe the P&L for that day is showing, negative $50, but that can always correct itself. And if it doesn't, like Ches was saying, you still have protocols in place where you, okay, well, if that happens and it's going against me, I know that I can do that. And, these are just all things that are associated with, advanced options. Are advanced options for everybody? No, there's no one size fits all. But I mean, when people, get a hold of us, hey, I have a full-time job. Can I still do trading? Well, yeah, you can do trading. Can you do day trading where you sit in front of the computer and, nickel and dime things over and over again? Probably not, depending on your schedule. But if you're super busy, there's plenty of other ways out there for you. So I was actually going to ask you about your routine and strategy, but you just totally took that. You took the ball and ran with it. So I'm going to move on to the final question here before Ches offers up his time machine. But as far as strengths and weaknesses, what are some things that you feel that you're doing very well right now? And then what are some things that you have identified that I don't know if it's a weakness, but just something that you want to keep an eye on or maybe work on to get better with?
I think one of my weakness is definitely my emotions. Like I'm still trying to, which is why I don't have a big account yet. I don't want to commit a lot of money because it's still painful. Even though like I got some good losses, big losses compared to my account size. We're talking in the range of $200, and still it's painful. It's like, man, I just feel like I just lost this big amount of money. And so it's all about me adjusting the emotions, realize that I have this is the way trading goes. Like you're gonna have some winners, and then you're gonna have some losers, and then it's the matter of figuring out what to do to prevent those losers from happening again. Which is why I have created a lessons learned book, which based on my loss, I realized what went wrong, and then I'm trying to prevent that from happening again. And but that would be my weakness. It's all about the emotions, like trying to realize that it's okay for me to first not to be on a trade every single day, because I'm still kind of getting kind of with the habit of what I used to do with loan option is it's that I felt the need for me to be on a trade all the time, like one place a trade once a day, and now with advanced options, I had to realize that I just have to wait. I had to wait that the IV it's okay for me to get in, and then the charts for me also okay for me to get in.
And sitting down and not doing anything is not an easy thing to do. I'm sure listeners out there have no idea what I mean, but I promise you it is not as easy as it sounds.
And then one of my strong suits, I'm still working on it. It's for me to figure out the trends, the what's called the spaghetti, the trends. I only use three SMAs, which is the 200, the 50, and the 21. And then I'm still trying to understand them well, like based on my strategies, which trend it's better for me, which SMA will be better for the plan. That's something that I still have to improve, just based on my strategy.
And that kind of comes with time, but obviously you know what you excel at and what you need to work on, and that kind of self-realization is a super strong attribute to have. I just want to commend you first off on your destination, essentially your entire route to get here, in terms of finding out what type of trading worked best with your schedule and your personality and all of that. And obviously it sounds like it's working, and I love that little, I forgot what you had phrased it as, but kind of the book, your book of mistakes that you can kind of go back and look at it and kind of figure out, how can I avoid doing this in the future? So that's pretty awesome. I think more people could benefit from doing that if they would do the same. But it's been a pleasure talking to you. I do know the only reason you came on today was to borrow my time machine, and
of course,
if I was to lend it to you and you could go back anytime and give yourself one piece of advice that's not a buy or a sell advice, what would that one piece of advice be?
I will tell myself, get away from the internet. on a good context, get away from stock tweaks, get away from the street, get away from option alpha, because they're just a bunch of scammers. The truth is, like I say, they have guys going bullish, they got guys going bearish for the same stock, and they have you going, they have you going like both ways. They actually confuse the reader. They actually, instead of helping the guy reading the article, they're making more obstacles to make him more confused. So that would be my advice. Just stay away from stock tweets and all those kind of pumpers, and what's called the term for the other ones, for the ones that
just the internet. I think what you're trying to say, and correct me if I'm wrong, but if you were going to go in the time machine, you would go back and say, you know what, just learn to think for myself from the beginning. Is that a fair summary?
Yeah, absolutely.
Okay. Because you summarize it perfectly. Yeah. Joe's saying this is bullish, Bob's saying that's bearish, Sherry over there is neutral. It's like, well, what? You just got to learn to think for yourself, people. And that's why you have to have a passion. If you don't, that's fine. Just invest, give your money to, a financial advisor. Just, do whatever. But at the end of the day, if you're going to get active, you got to just, at the end of the day, think for yourself, because headline reading, headline trading is all you're going to do, like Diego described, is just be confused, and it's not going to yield anything worthwhile. So, but now we move into the fun stuff. Looking, I don't know where the time's gone. The time has flown by, but I actually have to get on the road soon because I'm going down to Ohio. Again, Christmas at the time of this recording is, very soon. So I'm going down to spend it with my family in Ohio. But we have some time for some fun questions as always. What is your favorite movie?
All right, I've been thinking this one for quite a while. And every time you ask anybody else on other podcasts, I always say the same movie. It will be Interstellar.
Ooh, that's a good one.
It's just
that's an awesome
movie. It's awesome. That's with my list. That I have a list of movies that I can watch on any time. I can repeat, watch it again. And that's definitely number one in my list.
Yeah, I love kind of thinking movies like that, and I'll throw a nasty curveball at the end. And I just love movies like that. Those are always what I kind of gravitate towards. What would you say is your favorite meal and dessert?
So my meal would definitely I will. I'm in Argentina because of work, and then definitely it will be the ribeye steak. But if you ever going down there, you have to get one of those. It's
Yeah, anytime I hear
delicious.
steak, anything,
It's
that sounds tasty,
yeah, it's gonna
Diego.
be
That sounds very, very
a
tasty.
medium rare ribeye for sure, anytime. For my
You,
dessert, I think it's a combination. It will be some hot apple pie with some vanilla ice cream.
that's just pure America right there. Hot apple pie and pure America. What's that? I for somebody's sings a song with about apple pie. I don't. Bye bye, miss him. You know what song I'm talking about, Ches? She took the Chevy to the. Never mind.
Yep, yeah,
Yeah,
I
you
do.
know,
I just don't know the name of it.
okay.
No, I haven't thought of that in forever.
Yeah, isn't it called America? I don't know what it's called, but anyways. Well, look, Diego, you might be the first person that's ever gotten me to sing on a podcast. I can't remember. Maybe I've
That's
sung
good.
before, but
He does it a bunch on webinars, but not
Yeah.
on podcasts.
well, some people
Breaking
say
out
I'm
your shell.
some people say I'm the songbird of my generation. So I mean, that's a reason enough to join it for the podcast. But anyways, final question here: 3 words, and these you know the question, but listeners
Yeah.
may not. But these 3 words, what would you use to describe and associate with what in your mind it takes to be a successful trader?
All right, I've thought this one out, and I want to give it an answer with a level percentage of the weight for each word. So we're talking about
You are
knowledge.
so an engineer.
Knowledge will be my first one, and that's about 55%. You need to know. You need to know. You just need to know. Technical. I mean, no, not either technical analysis or fundamental, whatever your thing is. But you just have to know. You just cannot just what we say. It's to shoot out of the hip. You just have to you have to become a sniper. You have to know exactly what. Yeah, you just. I'm sorry. You just need to know. And then that's just 55%, and then 45%. No, I'm sorry, 40%. It will be psychology. Like you just have to deal and learn your emotions and figure out what works, what's best for you, what's not best for you, how trading goes. Learn to embrace those losers and learn from the losers. And the 5%, it would be luck. It's luck because especially for option traders, sometimes you can have a great plan. You just know you just have the chart on your side, the odds on your side, the probabilities are on your side. But then something else that you don't see, you don't think about is the analysts. These guys can come the next day saying like, I think this thing is going to 400%. And then suddenly the market jumps on and the thing goes out of the park, and then your entire position it's on a full loss because that just happened. It's just pure luck that your position was unfortunately touched by the death hand of the analyst. So
I like that a lot. I would probably use the unknown instead of luck, but hey, I mean, I get what you're saying
even
because
better,
you're right.
yeah.
There's always
Actually, I'm
there's
sorry,
the
go ahead.
unknown factor out there that you just never know may happen. Well, Diego, thank you very much for hanging out with us, and I
Thank
enjoyed it.
you.
I'm glad we could finally fit you in, and we will have you back at another
Yes, sir.
time. And just from me to you, I would say that I love people like you because you just do what it takes. You don't offer up excuses. I mean, it's crazy. Engineering degree, 40 hours a week working, wife and a 5-year-old kid, and you are continuing to learn how to trade and are trading. So again, I'll end the podcast with this. No excuses, listeners. No excuses. Thank you very much, Diego.
Thank
You'll
you,
come
Clay.
back and hang out
Thank you,
with us again,
Chess.
right?
Yeah, absolutely. Please, anytime.
Perfect.
Hopefully, sometime I guess I'm open. You want to repeat again until 16th of January? That's when I start another semester, and then probably by spring break I'll be open again. If that's not too soon, then by summer. But I'll be glad to be invited again to another podcast.
We will. We're gonna have you back. Any way you slice it, we're gonna have you back. There's no question about that. So thank you very much. And we will. I'm sure I'll see you in the chat room. Before you all go, final few things from my end. First, if you're listening on iTunes or any of the other podcast players, make sure to subscribe, especially on iTunes. If you could leave us a rating, that really helps us out and goes a long way. If you're listening on YouTube, make sure to check out the remainder of the channel. Of course, click the like button on this video first. But the channel as a whole does offer a lot of other content to which hopefully you decide to ultimately subscribe. And then finally, if you are listening at claytrader.com, make sure to click that share button, leave us a comment down below. We do listen to those. And we will reply back to them. So thank you again to all of you as listeners. Thank you to Ches, our esteemed host. Thank you to Diego. We'll see you all back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.